Good morning. It's the 24th of February. We are Signal Centre talking ball on this grey and wet Thursday morning and gloomy for other reasons as well. But there is one ray of light out there, and his name is Mr. Steve O'Hare, shining
Hey,
down on us, giving us hope. And
yes,
happy birthday
exactly.
to you as well,
Yeah,
sir.
thank you very much. I thought you were just going to break out into songs straight away, but
No,
obviously you're teasing us.
yeah, I just thought I'd give you a nice introduction because you deserve it, mate. It's your birthday, and I don't know what I'd
Lovely,
do without
lovely.
you, to be honest.
Oh, that's really sweet. Thank you very much. Well,
I
what a
haven't
good.
got you anything.
All
That
right,
was it.
okay. All right. I thought the card was in the post or something like that, but don't worry, mate. It's the thought that counts. At least you thought about not getting me anything.
Yeah, definitely thought about it long and hard.
um,
Um,
yes. What's going
yeah,
on? It's Russia talking about making a move.
talking about it, they've done it, haven't they? They launched the attack overnight, according to the latest headlines. The markets were unable to escape the flow of headlines surrounding the Ukraine and Russia situation yesterday. Overnight, President Putin stated that Russia had announced a special military operation in the Donbass region with military forces crossing the border. There were reports of military forces entering Ukraine from multiple points, including Belarus, and evidence of attacks on military airfields throughout Ukraine, including one near Kiev. So it looks like it is very much underway. Certainly, the markets are very spooked by this already, and we're seeing some pretty substantial moves across the board. You know, already on the back of some severe weakness, particularly in the equity markets. So we did see a bit of an attempt at a rally yesterday, but the confidence in the market has gradually deteriorated throughout the trading session. The yen and the Swiss franc secured backing, while oil prices posted limited gains, and precious metals also secured some big moves as well, which we'll come on to shortly. We've got gold up at 13-month highs. We've got oil spiking to fresh 7-year highs. But also in and amongst this, we did have some chat from the Bank of England, which, you know, is paling into insignificance really at the moment, considering what we're seeing with what's going on in Russia and Ukraine. But the Bank of England Governor Bailey stated that second round effects very clearly pose a risk to inflation, but they are trying to calm fears that we are going to see a big hike in interest rates, despite them saying that they believe inflation is likely to stick around for a bit longer yet. So we also had some Fed members as well talking that there is more urgency for a move on rates, and that pretty much signifies that we are likely to get this 0.25% hike in the March meeting. So lots going on today. So I think it's probably time to get stuck into some charts, Steve, because you know, they're looking very interesting today. I can see from the little icon down the bottom that you're probably going straight in for an index,
Yeah,
and
exactly.
we are looking at a completion of a head and shoulders top there, I think.
Yeah, looks like it. We talked about this yesterday, and funny enough, my moment of weakness yesterday, I'll forever regret. It's like every day I come in and I sell the indices, I sell the indices, sell the indices. And yesterday, I sort of it offered me a little ray of hope and a little bit of a solution. There was this inverse head and shoulders that I picked up on the Nasdaq chart, and although there was a gun to my head, so I've got a little caveat for this gun to my head. So I had to make the decision there instead of waiting for the break of the neckline. So obviously that teaches you technicals work
Well, listen,
way
for any
better.
any sharp people out there, when they hear that Steve's buying the index, we all know what to do, don't we? We all,
Exactly.
yeah, it's a
Here we
reverse
go.
indicator.
Here we go. This
You
is what I
nailed the
said.
top.
I said buy a break of here, but
Yeah.
obviously we had a gun to our head, so I had to buy it here, thinking it'd break. What Putin's not going to do that, surely. And lo and behold, he sort of well, someone says he's done it. I think it's fake news, to be honest. But anyway, we'll get into that later. But yeah, it sort of, it didn't break the neckline, so it wasn't a buy trade idea. It shouldn't have been a buy trade idea, and it's carried on lower. So that'll teach me. And let's jump back to the daily chart on the Nasdaq. Obviously, we've got this downward sloping neckline, which, as we've said for the last few weeks, they're the really volatile ones, and it has worked. It's like gone through and it's sliced through it. The next level of support really for me would be the May 2021 lows, and then the March 2021 lows. obviously it's not far away. What I've done, I've basically also drawn the Fibonacci's in from the swing low from March 2020, when the start of the pandemic, and we've got a 38.2% fib retracement coming in around about 12,900 along. So this backs up this supportive area from May. So watch out for there. Also got a little bit of support at 12,735, but then after that it's 12,250 around that area. 50% fib retracement would be 11,702. So although it feels like the end of the world and indices have really, crashed lower, it's not really a big deal as far as the indices are concerned. I mean, you'll see much more of a exaggerated move in the DAX, in the European stocks, obviously because they're very much closer to the action taking place in Europe. So yeah, for me, we've made a low of 13, just above 13,000. So haven't broken that quite strong psychological level, and we're bouncing higher. So let's take a look at the 4-hour chart on Nasdaq. Maybe I'll just focus on one really indice and then briefly pick up levels in the others. So yeah, currently the 4-hour chart posting a bullish hammer. Now again, it's sort of like when things are escalating and it's like Russia, Ukraine. There's a lot of pardon the phrase, news bombs being dropped. The volatility will obviously remain very much elevated, but a bullish hammer is something that you wouldn't expect to see. You'd expect something like this to be in a little bit of free fall with the panic, but there seems to be a little bit of panic, but not a huge amount of panic. So maybe something that we can come back from at this early stage. We'll have to wait and see how things develop, obviously. Similar sort of price action in FTSE. Now, FTSE spiked down to the low we saw at the start of the year, 24th of January, actually, 7,225. Hit that level, and the reaction high has been just as aggressive. We've rallied 75 points, and looks like it's posting a bullish hammer. So again, we're sort of like hitting this sort of like 8 to 9 o'clock time period in the UK, and things are looking slightly more positive than they did a few hours ago. Again, bullish hammer on the DAX. That's got down to a 78.6% fib. Where am I taking that from? Don't really like the look of that level. Let me look at maybe a bigger chart to really understand. Yeah, let's get a real proper fib from the lows here.
38.2 is what we're looking at, I reckon, but it's got a bit more to go.
Yes,
But what I
yeah,
also noticed, Steve, if you do a measurement of that range that we've broken down from, or sort of
yeah.
strange looking head and shoulders, pretty much lines up with the 38.2, so it's all kind of coming together at one place.
Yeah, I mean, we can see this sort of like the peak we reached in February 2020, just before the pandemic. That came in at 13,828. And that's what we've hit. We've actually hit that. Well, we just got below that, 13,795. So just took that out by about 30 points. And then we've reacted higher aggressively. But yeah, the measured move target comes in. Yeah, you can call this is basically a double top formation that was confirmed on the 21st, and price action is moving lower. Double top formation has a measured move target of 13,500. So still sort of 600 points on the downside potentially. But yeah, looking at the short-term price action, even if we break it down to the hourly chart, we've got this like morning star, doji star formation, whatever, but the nice reaction higher. But yeah, still a long way to go to get back to where we were yesterday. Let's go and jump onto the commodities, obviously, because there's a lot going on here. Obviously, we're extending higher. This fifth and final wave hasn't finished yet. And well, actually, let's go to the weekly chart, because we have to get a little bit of go back all the way, as Joe said, to how many years is it? 8 years? 8-year
10-year high.
Right, yeah. I mean, July 2014, we were at these levels, and you can see how the exponential rise is, the angle is so acute, it's unsustainable. However, it's not a reason to just sell it. You have to wait for a technical correction, that technical correction, isn't going to come anytime soon, especially with Russia-Ukraine situation. So looking at the shorter term levels, a bit tricky really to give you any decent levels. Obviously the $100 level will be a psychological level. That's a WTI. On the Brent side of things, we've already hit that. We've hit the $100 level, just trading just below it. So there may be a little bit of a downward reaction now that's been taken out. But Brent crude obviously not the same as WTI. There is a price differential there of just over $2. Support really coming in around about the 94.62. It's a bit of a way off. The low of the today will find support 96.11. But yeah, that remains elevated. Natural gas. Oh, this was a good trade idea. That's what I posted yesterday. Didn't quite get down to the buy level, but yeah, natural gas is getting up to levels we saw in February and January. We had this peak in between. We had this head and shoulders formation, which played out really nicely. We're back up to the shoulder level. It's coming in just around about for. Let me get the line up so I can show $4.95 to $5. So that's will be a level of resistance there, and obviously above that we'll see 5.31, and that seems like an awful lot of money to pay for natural gas. However, let's take a look at the weekly chart and let you realize how little it is still to pay. We've still got this. Basically, we've got this double bottom or triple, well, double bottom over here. The neckline's at 668, which we stalled in front of. This double bottom here, we broke, confirmed that double bottom. However, the throwback has been quite aggressive, pulled back to the 61.8% fib of this move higher before rallying again. So for me, 668 around those levels is really the level we need to get above for us to really seriously think about the move higher, which targets a move to $11.50. That would be a real poor situation, I expect, in the Ukraine-Russia situation, if we're to get there. So gold is going for it. And the next level of resistance coming in is 1962. That's back from November 2020, and also the August, and also Jan 21. So there's a good couple of decent levels. It's 1962. There's also 1975, if I remember rightly, was one, and 1992. So this is a real challenge for gold. We are pushing higher. Obviously, dollar, is that moving higher as well, Joe? That's presumably what is going on. I haven't really looked at dollar this morning, but it's always an unusual situation when you get conflict like this. You get the safe haven of the dollar and the safe haven of gold, and they go up together. So normally gold will move the opposite to the dollar. Everything goes out the window when you get a conflict like this. So yeah, where can I look to buy dips? I mean, really, 1915, around about 1900, 1915. But yeah, it's broken out the triangle on the daily chart and extending aggressively higher from here. We can get a measured move out of that, but really focusing on this double bottom that's been formed. There's the neckline. Here's the double bottom. Let's get the measured move target of that. I'll just use a straight line, but measured move target of this double bottom formation, $2,115. Yeah, it doesn't look far away now, does it? That'll take out the all-time high, 2075. Wow. So yeah, interesting. So cryptocurrencies has got bashed, as we thought that if indices drop lower, crypto will go with it. We've got support coming in at 33,200. Well, 33,100 to 33,200 to give you a range there rather than just one level. But the real main support is at 28,800. That's the one to watch. Again, yeah, the rally has been sold into. Top. Yeah, that'll be massive. Bang, bang, bang. But yeah, the double top, that'll give a measured move of something like zero. Minus. I think it's like, yeah, I think it is. I think we've talked about this one before. Well, let's give it a little bit of room. Well, let's take that. And right, if we do get a break of 28,800, oh, didn't do that very well, did it? Oh no, not so bad, Joe. 13,300. Now that's 13,300 is not a bad level really for a number of reasons. We
Fantastic
had
level.
this
Look at
speak
it.
high, yeah, yeah. So that's where we're heading in Bitcoin. Just once we break 28,800, not if, once we do.
We had 5 people drop off the video when you said that.
What the other 500 doing? Yeah, so yeah, sorry to burst the bubble, but it's not me bursting it. I'm just like looking at the charts, and they have got a chance. It hasn't actually broke 28,800 yet.
Yeah.
If it does break 28,800 and closes below there, from a technical perspective, that's very negative indeed. And the measured move target, the potential is a move down to around about 13,500. So you've been warned, like you have every day. My patience with Bitcoin is waning, let's say.
Just on the blockchain and crypto space, your son was having a dabble in some NFTs and did pretty
Yeah,
well.
yeah.
What's going on there? Is that slowed up a little bit, or is there still
It's
lots going on?
it's slowed up a little bit, Joe, but I still think it's got it's early adoption stage. There's a lot of people looking at it. There's a lot of it's very much tied to Ethereum as well, and basically, if Ethereum coming off in price, you'd think that if the demand is relative to the what it's priced in, the actual NFTs would move higher in value, perceived value, Ethereum
Mm.
value. So there's a little bit of that going on, but it's very much still a really early days thing. I thought about it the other day, and we were talking about a booth at a stall and having a virtual reality headset and sort of like using our tools and the trading and have different scenarios and things like that. And it really made me think about the Russia-Ukraine situation. People are really, that's a real life situation. People involved, people are looking at it. It's quite depressing, to be honest. And a lot of people will find that and they'll want to, move away from that into their virtual worlds, stick their headsets on, forget about it.
Yeah, and the virtual
I think
currencies.
Cameron mentioned a film last night, Ready Player One, which is I don't think I've actually seen, but it's very much like that. You actually get you get paid to sort of like work in a virtual world, and it shows that you sort of like you don't care about what's going on the outside or something like that. So I'll have to watch it to get a bit better view. But yeah, so NFTs will have its day sometime. It's got really good theory behind it, especially with smart contracts and things like that. But there's that underlying. I think we're publishing a piece shortly on the sort of, what is it we're publishing it on, Joe? It was like the centralized, the more of the government's adopting cryptocurrencies or creating their own one,
Yeah.
and the belief that will supersede all the coins, the main coins and the alternative coins.
That's how we'll trade currency in the future on a blockchain, basically, which will
Yeah,
be government
effectively.
coins.
Yeah. And yeah, I suppose it's just the world changing and yeah, pretty scary.
Okay. Well, that took us off course from the actual scary stuff that's going on at the minute, which is obviously Ukraine and Russia. So let's just bring it back to FX just to round up our overview on the charts. As Steve mentioned correctly, dollar is pushed higher today. So, typically when things kick off, you see appetite for the dollar grow because it is typically a safe haven, as you can see. Really strong move high today in relative terms, up by 0.44% so far, and fast approaching a key couple of levels of resistance at 96.94 to 97.05. And then we've got this previous high up here. I mean, there's a big cluster basically of resistance levels that we need to think about in the very short term. But if things continue to look poor, in the region, of Ukraine and what's going on with Russia, we could easily break through this pretty quickly, and then we're starting heading up towards this 78.6% fib level, which is around about $100. So that's where I think my medium-term targets were this year. I did think, without knowing about this situation that's going on in Russia and Ukraine, I was looking for dollar index to get up to 100 at some point. So it certainly looks set to get there, I think, at some point, and remains pretty well bid. So that's obviously going to have a negative impact on some of the popular currencies that people like to trade. Euro, US dollar being one of those. That's down by 0.46% as things stand at the minute, and fast approaching those previous lows that we posted at the end of January. So we've got some key support levels to target. This box I've got down here, this rectangular box, is actually the measured move target of this head and shoulders top pattern, which completed back in August last year. So we're getting closer to that as well. And then we've got some big support zones down here as well to consider. So overall, the trend remains very bearish, and I can't see anything changing on that front at the minute. I still think there is going to be continued appetite for US dollars, and they're going to be a more attractive investment for people than the euro at this point. If we take a look at cable, that's failed into this kind of downtrend resistance line. Big move lower today, down by 0.6%. Again, probably more to do with dollar strength than it is to do with sterling weakness. But no signs of that slowing up. Looking for a retest of these lows that we posted at the end of January, around about 133.60-ish. If we look at some of the riskier currencies, like the Aussie dollar, for instance, versus the US dollar, we can see quite a sharp reversal on that yesterday. Still holding on to this short-term uptrend, but if that gives way, then I think maybe what we've just seen here is a mild correction, a lower high, and likely to see things continue within this downtrend for now. The yen and the Swiss franc actually are looking pretty positive as well. Again, considered safer haven currencies, so we've seen money flock into those currencies. We saw a big reversal yesterday again. The Aussie giving up some of its recent strength, posting again what looks like a lower high, and potential for this to reverse and start heading lower. If we look at the New Zealand dollar versus the Japanese yen, it's a similar situation. They potentially forming a large top here, which would indicate that there is going to be money coming out of the riskier currencies like New Zealand dollar in favor of these safer haven currencies like Japanese yen, Swiss franc, and the US dollar. So all looking poised really for some potential reversals in trends in the longer term time frames. In terms of sort of persistent trends, I think euro US dollar looks set to continue moving lower. So does cable. If we take a look at euro sterling, that actually put up a bit of a fight recently. So it seems as though traders are actually preferring to own euro over sterling amid all this what's going on with the conflict in Ukraine and Russia. But I wouldn't be backing that at the moment until we can see any sort of takeout of these resistances up here at 84.79. So that pretty much wraps it up on the currencies front. Steve, you just posted a headline down there.
I did. It's from Reuters. It came out about 6 minutes ago, and
Okay.
I just saw it. Advisor in Ukraine presidential office says situation under control. There will be no blitzkrieg. Don't know who the advisor is. Don't know.
He's Russian.
But it's like it's a Reuters headline. It may be quite important. Interesting question that we've had posted from Kavita Veru. When do you think the government crypto could take place approximately? Well, we're issuing a piece soon. It'll be on our LinkedIn and our marketing. It's already happened. The Bahamas, of which Nassau is the capital, became the first country to introduce a central bank digital currency, CBDC, in October 2020. This is called Sand Dollar, and it beat China's ECNY by 6 months. So China's got one. Bahamas have got one, and China, Sweden, Nigeria, and the Bahamas are amongst the few countries with CBDCs in use or in advanced testing anyway. So it's already here, and the BIS, the Bank of International Settlements, in their 2021 annual report found that 86% of all central banks see promise in CBDC development. So I think it's just an evolving situation. I think in 2018, the prominent economist Nouriel Roubini predicted that CBDCs would destroy Bitcoin. So I don't know. Don't really know exactly when approximately it started. But it's all about the adoption, isn't it? That just takes time.
Yep.
But it seems to be. I think the pandemic has forced us from a cash society to a cashless society. So that's, for me, that's the first step. So you think about it now, you very rarely carry cash around, in compared to even just a couple of years ago.
Some places are now refusing to take it, from what I can
Well,
see.
this is it, and this is what happens, and then so it all becomes on your phone, on your card, which is not necessarily digital money yet, but it will become digital money eventually. So yeah, but it's happening, buyers. Yeah, we just have to be ready for it.
Okay. So gun to the head trades from yesterday, Steve. We touched upon your one already. You went long of Nasdaq and called the top, and it reversed. So we got a stop out on there,
Yay!
and we had a 35 tick win on Aussie US dollar, which continues to look weak. So that was quite nice, but only a 0.65 R win, which overall put us down on the day, but certainly could have been worse. So let's
Well, it would have
dive
been worse if
into.
we didn't have a stop, Joe.
Yeah,
Do you think? Yeah,
absolutely. Yeah,
exactly. Yeah,
yeah.
very important to have them
Positives.
stops. So, listen, I'm sort of like, I feel a bit of a fool if I was to buy indices again today after this sell-off. But there's just a little bit of this. I don't really know much about the situation on the ground in Russia or Ukraine, but I'm just sort of like reading the markets, and I think it feels like things have stalled. And we've had quite a serious move overnight in the indices in gold. And once you have these big, very aggressive, quick moves, the pullback could be just as quick if we find that maybe this doesn't escalate further, and there's just a bit of sort of maybe a little bit of a turnaround in events. So I'm going to, gun to my head, I think, yeah, quite like Putin. Seems like a nice guy. So I'm going to think that he's not going to continue with this onslaught that we've read about, and he's going to turn around and say, "Only joking." But if he does, then I expect gold to move back to around about the 1915 level. So that's my trade of the day. I'll make it bigger on the chart. This rally higher will turn around. The stop could be a bit tighter, but I'll leave it at 1950. No, I'll tell you what, I won't leave it at 1954. I'll only do that much of a stop. I'm going to go for it. 6-to-1 risk reward now.
Nice.
So $6 risk and a $30 reward. How'd you like those apples?
I love those apples. Hopefully they're not full of poison.
Oh, nice joke. Love it.
Novichok.
Oh,
Yeah, I think Putin's an arsehole, so I'm going to back it going lower. So
I can't believe you said that. He's
looking at
hit.
the CAC, he's got more on his plate to worry about in this video. So it's rallied this morning into this previous low here from the 22nd of February. So obviously a massive breakdown overnight through that, and then posted a reversal candle over the last hour. So I'm going to sell it in anticipation of more downside in these markets. And I just need to
Oh,
look
my
quite
word.
far back here to try and find a decent level to target. So I may even have to go to an 8-hour chart just to give me something. Just eyeballing this, looks like head and shoulders, as we talked about in all the other indices. So I'd say it's the same there in the CAC. We've got a break. Sorry about these drawings, but I'm in a rush. So I'm going to target that low there, which is only a 2R win. That's rubbish. I know, I've got a bit of a better entry now. All right, so I'm selling at 65.87. Stop loss at 67.77, targeting a move to 62.83 on Le CAC 40.
Nice one, mate.
Sorry, I'm going to move that target to 62.52. I was a bit off on the low there. So that is 3.8R I'm looking for.
Okay, good luck with that.
Looks like a bit of a ghost, doesn't it?
Does,
Okay.
bit spooky.
Does, yeah. Right, news
Kavita
today.
asked to sign up to our newsletters. They're all on our social channels.
Yeah, social channels is where you're going to find them. News today. We've got US GDP at 1:30, which is the quarter four second reading. At the same time, we've got the US jobless claims, and then at 4 o'clock today, we've got the US EIA crude inventory number, which I guess will be well watched given what's going on at the moment with oil being at 7-year highs. So keep an eye out for that if you are trading oil today. Long
Good
one
luck,
today,
everyone.
Steve. Nearly half an hour.
Yeah,
Celebratory talking
yeah.
ball for
Birthday
your
one.
birthday. Yeah,
Yeah, I'll go and put my feet up now, mate.
yeah, you do that, mate. Okay, we'll be back tomorrow. Hopefully, Steve will not be too hungover. Well, hopefully, he will be. It means he's had a good night. So
Yeah, yeah.
enjoy.
I'll do my best.
All right, good one. Cheers, Steve.
Cheers. Bye.
Bye.